Good evening. Welcome back, guys. How was your weekend? And I hope you did enjoy this weekend. Very, very insightful. And I hope if you don't have much to do this weekend, I hope you take your time to go through the chat and you learn. Like I always said, go to your chat. Everything you want to learn is same here in your chat. Maybe except you want to learn central tendency. Maybe you want to learn commitment of traders report. You want to learn central tendency and quarterly shift. Even on a quarterly shift, you need to look at your chart. All right. So that's a very basic and important things you really need to look out for. So I hope you take your time. You did go into this chart this weekend. You come out with a better information for yourself and you know to better your understanding about this market. All right. So we're gonna dive into what we have today, which is very, very important. The new month, new week, a new day coming tomorrow, Monday. So I'm going to deep dive into the central tendency, what I'm expecting, looking out for this whole month of March, and how far can I am I expecting that market to rally, and giving you my own insights and give you another high insight in a way I look at this market. All right, I provide you with enough information and enough insights to guide you through this month. And I want to say a big thank you to my followers who has been with me all this while until we get here. It's a very, very nice a long ride for us, but I hope it was insightful and it was helpful to you as an individual. So let's not talk too much and let's dive into what we have for this month. So what you're looking at currently is the monthly contract for Euro US dollar, and and so I have a statement here. Let me give you the statement. Let me give you the guide. All right. So before I chip in anything, I want to chip in. So the Euro US dollar monthly contract has rallied weekly. Sorry, yeah, has rallied weakly, meaning not strongly, opposite of strong. So you don't find you don't. I hope I don't sound like a weak. I mean weak, something that is not strong. That's weak. All right, that's what I mean by that statement. Has rallied weakly from December 2023 highs and priced into and filled the monthly what inversion fair value gap, which I am looking to be acted as what a BC. All right, a maximum value gap or BC. You can see there is a fair value gap here, and also there is an inversion fair value gap here, which I'm using the inversion fair value gap and also the BC. And what I mean is that you can see this lower price delivery is weak because we did not break a structure. That's why I refer to it as a weak what price delivery. The price delivery is very weak, not that strong, right? So we have rally. This is December rally high. We create that swing high and we rally into this low. All right, and that rally has also cleared this December contract low. So I I was anticipating the ICT inversion fair value gap to form a characteristic of a bullish support on euro, which has been respected this month of February as euro sweep the December 2023 monthly candle low, sell side liquidity and reverse higher, closing as the what as an indecisive down close candle. What I mean by that statement is that I was looking for this inversion fair value gap to be respected, right? I was anticipating when we started rallying higher, lower, I was anticipating for this to form a characteristic of what inversion fair value gap and for market to respect that inversion fair value gap, which has been seen here, right? And the candle, which is this particular monthly candle, which is the February 2023, 2024, I'm taking us back. The February 2024 contract also respects that and close as an indecisive what down close candle, right? The body is weak, which shows a shift in price already, right? That is showing that there is weakness in lower price delivery. All right, that doesn't mean that there is more strongness in the higher price delivery, but it's just showing that in relatively there is a weakness in lower price delivery. Now, I am very pleased to see price open near the high of this month, which is what? Month of February, right? Which is the previous month, because now we are in March, right? So February is now a previous month to us, and we look at the high and the low of February contract to be our, the high should be our buy side and the low should be our sell side, or like that's how we look at it. Now we want to centralize our idea. Which of the high or which of these two PD array are we looking for to be swept this month that we are getting into, which is May? Sorry, which is March. We want to see which of this month we are going to sweep, right? The market is going to sweep. Okay. Now, subsequently delivery of higher prices on euro as price is showing respect to what, to the what inversion fair value gap. That is subsequently I'm expecting what higher price delivery on euro. So meaning that I prefer the buy side of which is the previous month high to be taken, which is this high, the February high. I want to look at it to be taken this month that we are getting into. Now, if euro find its way higher and above the February 2024 high, I will be very conditioned to see if that would be a liquidity run or a Judas swing or a price higher above December 2023 candle high. Now, what I'm calling out there is that if we price above this particular high, because we open close to that high, so if we price above that high, is that high going to be a liquidity run, a Judas swing, or a real time price high that is going to lead us above this buy side liquidity? I can't only call that out. I want to see how we close above it. So currently we are bullish until we close above the high of previous month. So as soon as we close above that high, or as soon as we get above that high, we should be more cautious. And also that high, it's as what, a premium market. All right. So if we price above that high, it's already at premium market on the what, monthly contract. So we need to be more careful, because anything at premium, if you are buying at premium, it is very, very, very what, risky. And my current range I use is this. Let me mark that out. Okay, I'm not in a haste to finish this video, right? So even if time collapse, I will start a new one. All right. So if you use this range, right, that this is the range I make use of. Okay, if you use that range, we are, you know what, almost close to the what, 50%, which is the midpoint. So anything that price above this high, we already at premium. So now we want to be very careful not to even hold. Current situation does not what, uh does not give opportunity to what, to hire to swing traders, right? What I mean by that, if you are a swing trader, you want to hold the market for a longer time perspective, you cannot do that right now, because at the current situation on euro, even on the XY, does not permit that. All right. So we're going to see if there is a deep divergence on between the euro and the dollar, right? If there is a very big divergence, all right, that's if yeah, if the dollar index is showing strongness to go lower, then we might actually say that we can come above here. But if this, if the weakness in the dollar is not that much as well, then there is a higher chance this price run will still remain on this range. All right, but I definitely know before this year collapse, we're gonna go above this range. So this year is gonna be a tight range and a rough range. If you cannot trade, then leave it. But if you want to really, really trade, you need to what, learn how to what, navigate it. I mean, learn how to navigate it. All right, it's been difficult for me. I can't lie you. Previous month is been difficult. I mean, really, really difficult to mark out these buyers, to be, to call out the market, right? You need to look at several characteristics or several markets to come up with a bias, and which you cannot be what, 70% probability for you, almost 60%. All right, so now we look at the market in two ways, right? Which liquidity are we going to sweep? How far can we go? How strong is the market condition right now? Is it strong or weak? right? Meaning if it's strong, is it strong on one direction or it is weak, just navigating through what uh, a range, all right? So that is very very interest and this current price is very very interesting, and I promise you, if you learn how to navigate this current price when the time comes for such move like this, what I mean is this kind of move. If you look at this move lower, this kind of move is centralized on a particular direction. When this kind of move position itself, either next year or next upper year, if God's allow, if God give us life to extend to that days, then you can make a whole lot of money. I mean it, because right now, if you look at the current situation, we've been on a particular range, right? Very, very critical on that range. So now let's learn to navigate it or don't trade at all, right? So we're learning to navigate it. And some people has run from this Euro, GBP, even the XY to go to other markets because it's rough. But they don't know that the hard way is always the best way. I'm telling you the truth, the hard way is the best way. So let's go to the monthly contract for DXY before we go to the weekly. All right, so that's very very important. So this is the monthly contract for the XY. Now as you can see, is it, now I'm just gonna ask you a question. Pause this video and and like think about yourself, think for yourself. Is this a higher probability lower prices on the monthly, although we swept previous or we swept this buy side? Are we really going to continue lower prices? How far can we go? Now, if you look at the current situation, it does not. It's not even clear that we are going to leave this range, right? How, we want to see when are we going to leave this range, all right? Now, you don't know that. That's what you don't know. But what you know is that with the current price delivery, we are coming below this previous month high, sorry, previous month low on the XY. So if you know we are coming below the, let's centralize our ideas on what the low of this of February low, the February low, and see how we can navigate and trade our, and trade to that low before we think, or before we see if that will be a liquidity run or a sweep of liquidity to reverse, or is actually, or that price action is actually going to take us what below this December low, right? So that is a very critical thing to look out for. And I hope I'm not shouting because I'm so energetic today. And I want to say I'm very very sorry for delaying this video. I'm supposed to give you this on Saturday so you can actually go on Sunday and work for yourself. But you know, time we how did they say that word? Man proposed, but God disposed. All right, my phone got spoiled yesterday. I had to go and change the screen today. So that is very very complicated issues, but alhamdulillah, life is still there, we continue and all that. So let's go to the Euro US dollar weekly contract. All right, we this is the weekly contract for Euro US dollar, and let's see. Yeah, Euro US dollar. Let's see the Euro US dollar weekly contract respect the weekly inversion fair value gap formed on January 2024, and euro closed above the inversion fair value gap high, which is also an insider weekly back candle. What I mean that this candle is an insider weekly back candle, and we close above the inversion fair value gap, which is this weekly inversion fair value gap. Now let's see the next statement. We can see that euro has rallied successfully higher from Monday 12 February 2024 weekly candle after sweeping the after sweeping what the weekly relative equal lows, and this price rally higher impulsively that lead to the conversion of the fair value gap into an inversion fair value gap. Yes. What I mean there is that you see this low, sweep this relative equals and price into this what weekly proportion order block, and we respect that also. Then price rally higher. There is a inversion fair value gap here. There's a fair value gap which price rally turning that fair value gap into an inversion fair value gap. And if you are following me up all this while, what did I say about inversion fair value gap? They are very highly effective, even more effective than the fair value gap itself. So I respect, I look into inversion fair value gap very well than fair value gap. Yes, I'm the one saying that because I have tested it and I have seen the answer, the result. Sorry. Now, if euro on the weekly contract find it way lower and retest on the weekly inversion fair value gap, that will be a deal breaker as I am anticipating for price to respect and use it to price higher and towards the weekly what buy side liquidity. Now, what I mean by a deal breaker, if this week open, which is the new week that's coming, if we open and we price into this inversion fair value gap, all right, if we open and we price into this inversion fair value gap, I am anticipating for this inversion fair value gap to be respected, and it's going to give me another premium price to buy. What I mean by that, if we come lower, it is going to give me a deep price to buy, rather than if we open and we continue going higher and we did not retest. That it did not give you what an opportunity, and that's what they do. Recently, that's what they do with this market. They don't price market lower. They don't want to give uh us the opportunity to engage, right? So, and sometimes you have to chase, but if you really know what you're doing, you're not going to chase. You're going to use a specific parameter to engage, not to chase. Use your logic, not your emotion, because if they drive this market, you're going to see that you're missing moves. But if you use your logic inside that moves, you're going to see an inflation fair value gap, or you're going to see a PDRA that supports that move, that is going to be retested, even if it's what an institutional order flow entry deal. I'm talking, right? An institutional order flow entry drill. I feel like I'm preaching, but no, I'm not preaching. So let's go. Now, I have an added contest, which is if EU, which is euro, price into a subsequent lower time frame bullish PDRA, I will be in a net position, in a net long position, as also it might not retrace any further lower, right? What I mean by that is if I go on a lower time frame and EU price lower into that lower time frame, I'll be in a net position, but I'll be more conscious that we might actually retrace. But I'm not waiting until we retrace into this low. I'm going to be in a net position higher, all right, and also manage the trade not to come back into a loss if we're actually coming back to this area. In as much as I'm telling you, I'm going to use the logic to follow it, not emotion. That's very important. And let's go to, so that has brought me to the weekly contract for DXY. All right, let's go to the AXY. Right. So on the XY, we can see there is a volume imbalance, but please note this volume imbalance is showing on trading view, but on MT5 it is showing an inversion fair value gap. Now you see the difference, all right? But I'm going to work with the volume imbalance, right? But it's an inversion what volume imbalance because we have traded below it, and we can see the market is all also we close below that inversion fair value gap. All right. So if the XY reprice into this area and euro have not retested on the inversion fair value gap, I'll be in a net position on in a bullish position, in a net bullish position on euro, because this also indicates a strongness on the euro to go low, on the XY to go lower. And what I'm seeing on the XY is there is a higher, and if you look at the if you actually know how to read the commitment of traders report, you're going to see that there is a net lower position. All right, but how far can we go? We have an inversion fair value gap here, bro. So if we come and retest, there is the market, and also this is at equilibrium between this low and this high, so there might be another ranging market around this area. All right, so this will bring me to the end of the monthly and weekly market review for this new month that we are getting into, and I'll be coming up with what the daily market review, as people complain, you guys complain on my YouTube channel that the one I did on Friday, there was no volume on it, and I hope there is a volume on this one. I'm going to listen to it before I send it out. All right, so I'm sorry for that disappointment, but I'm going to give you guys, I'm coming back with the daily. So stay tuned, or just click on go and check my what another videos that involve the daily contract for euro US dollar. See you. Yeah, see you on that one too. So thank you. I'm gonna chip in more information, but just stay tuned, guys.